During previous videos, we talked a little about how money is always looking for some place to work and the requirement of real estate investors to have a safe and reliable source of money for their investment needs. Hi, this is Alfred again with another Pockets of Specialized Knowledge video. Let's get right into it. There are at least 3 local sources of money available for real estate investing: brokers, hard money, and private money. In this video, we discuss brokers and hard money. Local brokers, for the purposes of this video, have gone the way of the dinosaur and the dodo bird. Back in the day, you could find these lenders in storefronts much like today's nail salons. They're everywhere. Does anybody remember this line from a famous TV commercial?
This is Phil Rizzuto for the Money Store.
Phil Rizzuto here for the Money Store.
My impersonation did not do Mr. Rizzuto any justice. I apologize. After Mr. Rizzuto retired, Jim Palmer was their spokesman until the company was sold to First Union in June of 1998. The Money Store used to originate home equity second mortgages and lines of credit, which back in my heyday I found very useful. Hopefully someday they'll come back. Household finance and beneficial finance did effectively the same thing. They were both sold to a British bank in 2003. As an aside, mortgage brokers took full and formal mortgage application and conducted their business within the bounds of existing lending protocols. Credit scores and employment history mattered. Too bad they're gone. I made a lot of money off their second mortgages when they went into default, but that's a story for another video. Since they're no longer in business, this is where the story of local brokers end. I just wanted you to be aware of their existence. There are, however, national brokers like Lending One that have burst onto the scene. I've seen other channels that discuss this lender as well as others. Perhaps you can watch their video after you've watched this one all the way to the end. In my mind, local storefront brokers have been seamlessly replaced with our next type of lender, hard money lenders. So where do hard money lenders get their money? Hard money gets their money. That's a lot of money. Let's do that again. Okay. Hard money gets their money from bank lines of credit and timid money guys. Hard money lenders have substantial credit lines with local banks. They borrow the money at 2, 3, or 4% and loan it out at 15 or 16%. Along with a few points thrown in for good measure. Timid guys with money will often give the hard money lender the authority to loan their money. The timid guy gets an increased interest rate, and the hard guy gets points. Nice deal for both gentlemen, as long as the loan doesn't go into default. But default, again, is a story for another day. Closing statements for hard money loans are packed with additional fluff and costs. Inspection fee, funding fee, processing fee. If the lender can think of it, he'll put it on the closing statement. And as it's said, a hard money lender never saw a fee he didn't like. Oh, is that the truth? Within the past year, I borrowed money from a hard money lender. I estimated the property's value as is at $230,000. The hard guy lent me $95,000. I received $88,000 in proceeds at the closing. The difference was his points, his fluff fees, and costs. The property sold for $235,000 in 30 days, yet I could only borrow $95,000. Hard money lenders are known as hard equity lenders as well. Their main concern for any loan is the amount of equity in the property and less about the qualifications of the borrower. They loan strictly on LTV, which is loan to value. This helps to explain their usually very low valuation of the subject property. Oh yeah, on my deal, the interest rate was 16.5% with a 2.5% late fee and no grace period. Better make that payment on time, Alfred. Some hard guys charge points up front, some charge them in the back, some charge both. However, there are some benefits for dealing with these semi-loan sharky guys. Hard money is always available. Hard money can generally close quickly. They only make money if they originate a loan, so they're very good problem solvers. For example, if the property you're seeking to fund is a little tighter than they like, they might offer to cross-collateralize with another property or two that you own. Before you decide to cross-collateralize, please see our video on the subject. Oh yeah, and all your loans will have to be personally guaranteed as well. So what this means is if you're the officer of a corporation and you borrow in that corporate name, you're still going to have to sign individually to guarantee this loan. Most hard money lenders have physical offices with staffs and overhead, but they don't generally have storefronts like Household or the Money Store. You'll recognize it when you borrow money from a hard guy, you'll recognize that when you borrow hard money, you're not only paying for the money, but you're paying for the convenience. Sort of like buying mustard from 7-Eleven. You'll pay 9 times the price that you would at Publix, but at least it's in your hand. Listen, if you learned anything from this video, won't you please hit the like button for us? There you go. Thank you. Another feature of hard money is that the terms and the rate of your loan will generally stay the same no matter how often you borrow or how good of a borrower you are. In other words, the establishment of a relationship will not allow your terms to improve, which is one of the main reasons hard money should only be used in the event of an emergency. They're always my lender of last resort. In upcoming videos, I'm going to show you exactly how to locate these hard money guys and how to get them signed up to fund your properties before you even need them. In any event, this is Alfred signing off for Pockets of Specialized Knowledge. Thank you for watching, and I'll see you next time.